Not really. I mean, we are on structural levels after a decade of deflation, and I think any higher interest rates and inflation rates in the zone where we are to be welcomed, basically as a reflection of the normalization of economic activity. So I think it's at this stage quite positive. And I very much think that inflation in that sense is really of transitory nature and not of structural nature.
Very interesting. So you've already thrown your hat into the ring here. So even as we see American markets fixate about the prospects of a taper of bond purchasing in the United States, you don't think we need to be concerned at all about the ECB and whether the ECB needs to start having conversations about adjusting its monetary position?
No, I would clearly not expect that. First and foremost, Europe is traditionally lagging in terms of economic stimulus and performance relative to the US. So that's very clear that the discussion in the US is stronger in that sense. And second, I think that the Europeans learned a very painful lesson in the aftermath of the 2008 crisis when they really came prematurely back to restrict, and that, of course, also triggered then the European sovereign debt crisis in 2011, so nobody's going to make that mistake again. And quite frankly, there is absolutely no need here. The recovery fund is getting started only, and we want to see firm effects of stable demand, post-pandemic situation, and labor markets normalizing. So nothing to expect from central banks. I think that news flow, of course, is always much faster than the economic realities on the ground. And this time, policymakers will really focus on labor markets, final demand and investment.